Good evening, everyone, and namaskar. So this evening we have an eminent speaker, Professor Lekha Chakrabarti, working at the National Institute of Public Finance and Policy, NIPFP, you all know. And she will be speaking on the monetary policy, fiscal policy interface, and climate change commitments. In fact, this topic is very, very important in the present context because we know that climate change now has become the buzzword, and many researchers are working on this topic, on the various aspects of this topic. And so people look at the macro aspects, micro aspects, and this evening, Professor Chakrabarti will be speaking on the macro and basically the macro aspects, and I think probably we would not have any better speaker than her. I'll give her a full introduction of the speaker, but before that I'll request or I'll first make the announcement that this meeting will be presided over by the President of Odisha Economic Association, Professor Abhinarayan Patra, who has worked for a long time at Ravenshaw College before it became Ravenshaw University, and then he was a deputy director at Madhusudan Academy of Administration, that basically imparts training to the OS officers. And then currently he is a visiting professor at Courts Koraput. That center focuses on the tribal research. And currently today he is also based at Koraput. And so now let me first of all, I welcome all the participants who have joined with us this evening. And I also thank Lekha ma'am for kindly accepting our invitation in a very short notice. And I know that she is always busy. She travels quite a lot. So in spite of that, she kindly accepted our invitation. And before I give any introduction, I should also tell you that Lekha ma'am is my teacher also, because when I was doing my MPhil and PhD at Center for Development Studies, Lekha ma'am has taught us public finance. And then my interaction with her, again, goes quite a long time, because when I worked at the 14th Finance Commission, I used to interact with her very frequently. And whenever I visit NIPFP, I have met Lekha ma'am very frequently. And of course, in the days of social media, we are in regular touch, that I would say. So let me give a formal introduction of Professor Lekha S. Chakrabarti, who is a professor at NIPFP and an elected member of the Governing Board of Management at the International Institute of Public Finance, Munich, the World Association of Public Finance Economists. She is a pioneer economist in institutionalizing gender budgeting in India, with Chief Economic Advisor, Ministry of Finance, Government of India in 2004. She is also a research affiliate at the Levy Economics Institute of Bard College, New York. Her areas of interest are macroeconomics of public finance, fiscal federalism, climate financing, extractive sector economics, financing, human development, and gender budgeting. She is the recipient of Infosys Best PhD Thesis Award from the Indian Institute of Sciences in Bangalore. Her latest book is Fiscal Policy for Sustainable Development in Asia Pacific, Gender Budgeting in India, published by Palgrave Macmillan. She is also the author of Fiscal Consolidation, Budget Deficits, and Macroeconomics by Sage Publications. So she has a long list of publications. I'm not going to read all of them. And she has worked with many international organizations such as IMF, ILO, the World Bank, UNESCOP, UNDP, UNOMN, and the Commonwealth Secretariat on various occasions and in different capacities. And her experience on macro fiscal policy and human development spans across 8 countries, including Sweden, Canada, Morocco, Philippines, South Africa, Sri Lanka, Vietnam, and Mexico, and many other countries. She has papers in national and international journals. She's a regular columnist. I'm sure many of you might have read her columns in Indian Express, The Hindu, Financial Express, Business Lines, Business Standard, The Wire, Hindustan Times, Money Control, Scroll, and has been featured in Forbes, then CNBC, ANI, DD News, All India Radio, World Air Service, and Rajya Sabha. So again, I think our introduction would be much longer, and I'm not going to read all of that. Ma'am, I really thank you for joining with us to share your knowledge with our members. And so with this note, now let me invite the President of Odisha Economic Association, Professor Abhinaran Patra, to give the introductory remarks. Over to you, sir. Sir, please unmute and speak. Sir, please unmute.
Thank you, Amarendra. Good evening to you all. Good evening, Lekhama. We are very fortunate that you are with us, and we will be discussing a very serious topic with a serious speaker. That is climate change. All of us know that climate change is a big challenge, and addressing climate change is a bigger challenge. But even then, a better future is quite possible. Even though the challenge is great and the means to address, efforts to address, they are also challenging. Even then, it is possible to have a better future by addressing climate change. And what is important for today's discussion is that we shall be discussing how monetary policy and fiscal policy interface can help us in addressing the climate change issues. And there are, as we know, various, say, what we call contradicting facts regarding this. We know that we have financial risk and we also have climate risk. We have to think of private profitability and social value of low carbon investment. We have to think of corporate profitability and then short-term interface between the public finance and private finance, between monetary policy and fiscal policy, and how central bank can address it, how the government's policies of like climate action, polluters pay, climate finance, and all these, they can help. So with this, I don't want to continue. I don't want to give you a lecture because it will be redundant to speak on this when a specialist on the issue is present with us. With this, I now will hand over the stage to Amarendra to coordinate the proceedings. Thank you.
Yeah, thank you, Ravi sir, for your introductory remarks. And with that, we set the stage, for Lekha ma'am. So, Lekha ma'am, it's over to you now.
Thank you. Thank you so much. My student, my special student, Professor Amarendra, thank you so much for inviting me this evening to speak to you and your friends about, the climate change commitments and what fiscal policy and monetary policy can do about it. And my gratitude to Professor Rabi also, as he rightly pointed out, now we are just 1 month away from the CoP29. So in Azerbaijan in November, there will be high table deliberations on this topic. So what could be that plausible policy framework to be articulated in the high table? That's exactly what we are going to discuss this evening. And, NIPSP was involved in, preparing the first national adaptation communications, public expenditure requirements or public finance requirements, and I was part of it. And as a part of the steering committee, I was privy to those discussions 1 year back, that how India is doing its preparedness towards the commitments. Like, over the years, we need to reduce the carbon emissions. But here, one thing we need to start our deliberation is about the energy poverty. Like, it's easy to have a commitment like by 2047 we need to reduce the net carbon emissions, but in that process, if we are trying to do overnight shift to the non-fossil fuels, then that leads to energy poverty. So this is exactly the problem India is facing now. So we can't do that commitment overnight to non-fossil fuels. Now, let us take a theoretical background to it before explaining or unpacking these concerns. Theoretical framework of this climate change comes from international public good framework. Climate change is an international public good. So we need to have some standard setting functions for this commitment. The first standard setting function is that, like global warming, ozone layer depletions. When we were kids, this was our major concern, that ozone layer will vanish, glaciers will melt. So how the countries need to come together to have deliberations on this regarding the international public good, and that's the climate change. Now, the second standard setting function, as rightly pointed out, within the environmental fiscal framework or environmental federalism framework by Wallace Oates, is about the interjurisdictional spillover effects. Like, we can't talk about climate change as a closed topic. There is interjurisdictional spillover effects to it. And third is the localized public good, because many issues like water pollution, air pollution, of course, air pollution also have the dimension of interjurisdictional spillover effects, but it's a localized public good. So these are the three standard setting functions by Valley Oates within the framework of the environmental federalism to take this topic ahead. So here I would love to take the interjurisdictional spillover effect, the second standard setting function, giving the example of what's happening in Delhi. Each month in Delhi, the reason for, the pollution is different. And by this time, and, little later, we have to face, severe smoke. So now the NDTV people will come and discuss about the air quality will be very poor in Delhi. But after all these things, when we forget it, again, next November, December, we talk about the poor air quality. It's about to happen because of the stubble burning in the neighboring states. We have not yet found a solution to it. So that's the one example which was handy for me to explain to you the interjurisdictional spillover effects and why the governments need to come together, either through the public financial practices, or without government, you can enter into some agreements, like what Pigu or COS visualized about it. So there are many ways in which we can deal with that. So once this is set, now let's unpack the policy priorities. In Azerbaijan, we need to commit to what is going to happen over the years, and it's like 400 more than 400% reduction in the carbon emissions we need to commit. And are we prepared for doing this? And when we looked at the National Adaptation Communications public finance requirements, my bandwidth is little, shaky, so I'm switching off the camera for a little moment. So what happened with the National Adaptation Communication when we prepared, the public expenditure commitments, we came to know that India spends on adaptation around 5% of the entire the public expenditure, and also around 5% of the GDP. So this means that we need to have the financing pattern of the climate change seeking from abroad as well. And when we look at the existing models, we have climate bonds. That's a thematic financing of, fiscal deficit through green bonds or the climate bonds, and which is comparatively a minuscule portion of the financing of the climate. Then we also have blended finance like PPP models. So we need to find money for this. So the financing is a major concern when it comes to the climate change commitments. Now, On the top of these financing issues, on the top of these energy poverty issues, we also need to deal with the tug of war among the economists regarding the policy priorities of monetary policy and fiscal policy related to climate commitments. Economists are divided. For them, climate change is a political economy issue. Yeah, it's a climate change is a political economy issue. So, Rekuram Rajan and many economists have spoken about this concern that once it is a political economy issue, then it is better that fiscal authorities deal with these issues through expenditure assignments, through intergovernmental fiscal transfers or ecological fiscal transfers, but don't come through the path of the monetary policy stance. And now we know that the recent monetary policy stance with the new members on board, they are deciding upon the rate, the interest rate management. So there, the mandate is fixed. The mandate is to tackle with the price stability. So when the mandate of a central bank authority is fixed at the price stability, what is the flexibility of the central bank authority to deal with the climate change concerns? But we got the clue that many central banks are not messing up their reaction function by integrating the climate change concerns, thinking that if we focus on price stability, the rest of the political economy issues related to the climate change will be tackled by the fiscal authorities. Now, the question related to fiscal authority is very different. We have seen the debt restructuring move. We have seen that the public debt across the world is mounting, and there are risks from the mounting public debt. So, when such is the case, what is the fiscal space to deal with the climate change commitments we need to see? And if the stimulus packages or the short-term public financial management tools are there to tackle with the climate change concerns, we need to ask all the governments to produce a transparent accountability document titled Climate Responsive Budgeting. And we don't have climate responsive budgeting narrating how much the country is spending on adaptation and mitigation if you look at the country examples across the world. Of course, Nepal committed, they have the budget tagging to do the transparent exercise how much the country is committed for the climate change concerns. But India, we don't have a climate responsive budgeting yet. The tagging practices have not yet begun. Of course, it's a public financial management tool. It is called the Green PFM, and there are processes happening at the union government level towards this. But the state Orissa is much ahead regarding the Green PFM tools. Orissa, has committed to the green financing or the green, climate change budget commitments 2 years prior. And we have a document in the Orissa budget documents that how much Orissa is spending on climate change commitments. So it is quite transparent, and we can track whether there is any reprioritization happening related to the fund allotted for the different components of adaptation, mitigation, loss and damage, and of course the natural calamities, because the state is vulnerable to many natural calamities. And Bihar, of course, they produce the statement, but it is only a portion of it. It's an ecological statement, but not the entire demand for grant analysis, the way the Orissa government has prepared. Now, excuse me. Now, in addition to preparing the climate action plan and the climate budgeting, we need to look into the avenues of revenue requirements. For a state government, the revenue requirements are not just confined to the own tax and non-tax revenue. We also need to depend on the tax transfers that coming from the center to states. Excuse me. And within the realm of intergovernmental fiscal transfers, by mandate, finance commissions were asked to do ecological fiscal transfers since 13th Finance Commission. And 13th Finance Commission, instead of complicating the formula-based unconditional tax transfers, they designed then conditional tax transfers to deal with the climate change commitments. But 14th Finance Commission, they for the first time ever designed where Amar was, working as director to the 14th Finance Commission, and in the 14th Finance Commission, for the first time ever, our country or globally, if you check, that's the first ever design on the ecological fiscal transfers. That is, when you design the divisible pools, the tax transfers from the center to states, that is based on a particular scientific formula. And within that formula, we need to ask the question, is there any criterion related to the climate change commitments, or is it only based on population, area, income distance, and demographic transition recently, and tax effort? Then we came to know that the data constraints, that was huge. So within the frequency, we have to look at the frequency of the data availability also. So given the data availability, 14th Finance Commission has taken one dimension of the environment to be a part of intergovernmental fiscal transfers, and that is net forest cover. And you have dense forest cover, moderate, very dense. So we have incorporated moderately dense as the criterion. In the sense, if you put very dense forest, then many of the states won't be able to get the money, because very dense forest, that criterion, it's not there for many states, but moderately dense is fine. And many states lost out in the process also, because, like Rajasthan, many states, they don't have forest. So net forest cover is the variable that proxy or that capture the ecological fiscal transfer dimension in India. That happened since 14th Finance Commission, and 15th Finance Commission has retained the criteria with some minor adjustments. So this move is welcome. And now 16th Finance Commission, we need to see how they are going to treat the climate change commitments variable. There are two paths ahead of them. One is they might construct a composite index taking into consideration not only the dimension of forest, but also the dimensions of pollution, air pollution, water, and other dimensions of the climate change commitments. But the practitioners, the bureaucrats, they always want a single indicator to keep the formula very practical and simple. So composite indicator means once identifying all the indicators, when you do the composite index, you have to do a normalization procedure. Then after that, you may give equal weight to all components. You can take the arithmetic mean or geometric mean. You need to construct a composite index. But are we ready to do that? 16th Finance Commission will enter into a composite index to capture the climate change commitments, and based on that, the interstate states share will be decided. And my hunch is they will stick on to a single indicator. But that could be, in all plausibility, it could be retaining the forest only, given the data constraints and given the technical difficulties in constructing the composite index, and also to articulate the composite index to the public policy makers. Usually, we always keep the criterion very simple within the tax formula or tax transfer formula. So we need to wait and see the decision regarding A, whether they retain the criteria on climate change. Two, what will be the weightage that will be given to the climate change commitments. Three, whether they keep the forest cover, whether they retain that criteria or they move ahead in incorporating the other dimensions of the climate change commitments. Excuse me. Now, they will have state deliberations. They have already started. And in addition to this climate criteria, in the unconditional fiscal transfers, the states will also ask about the specific issues they face. Like in Kerala, we have the sea rise issues. in Himalayan states, their issues are relatively different from the coastals. Then in Orissa, we have multiple natural calamities, hurricane, of course, the coastal issues. So, how the states are going to be bargaining about their requirement related to conditional tax transfers? That is another way to address this. So, within the fiscal policy, you have climate responsive budgeting at the center and the state levels, committing a particular portion of the budget towards climate commitments. In addition to that, on the fiscal policy side, you have intergovernmental fiscal transfers in which unconditional transfers will happen through giving a weightage to the criterion identified, and conditional transfers will be designed on the state specific issues. But that conditional transfers will be relatively, it won't be that huge. It will be relatively lesser when you compare to the unconditional tax transfers that is based on the scientific formula. Now, let's take a look into the monetary policy front. You can ask me a question. Has greening of monetary policy happened in India or in any part of the world? And the European Central Bank, the Christine Lagarde, she's very vocal about the greening of monetary policy, and they have done the green stress test within the monetary policy framework. And Bank of England also has led the green stress test, asking the top investors to give a transparent statement about the climate related risk and uncertainties, because these climate change risk and uncertainties in turn affect your financial stability. So take a look back to the Rajan statement that distinguishing green bonds and the brown bonds is little political. So central bank should not be entering into the greening of monetary policy. Let fiscal do that. But here the counter argument is that they limited their analysis based on the fear that the tools are not ready to analyze the climate change commitments within the monetary policy framework. But on the other hand, if climate change related risk and uncertainties affect your instabilities or financial stability issues, then you need to take a look into that. Now, RBI, there was a conference at, Taj Hotel a few months back about this greening of monetary policy. Their CAFRAL, the, Institute of RBI and Warwick University, they have organized this event together. So as a part of that, when we looked into these issues, as a part of that, the RBI officials revealed that within the priority sector lending, a part is incorporated for the green infrastructure. So that's the way, that how this balance sheet, the portfolio works like. For a bank, a certain part is statutory liquidity ratio. And after that, you have bond financing to deal with these concerns. And within the bond financing, you have done a thematic bond financing related to the climate change commitments. And the third part is your, priority sector lending. And within that 40%, a portion is linked to the green infrastructure. So that's the way, the monetary policy has taken this issue. Now, is it enough? Do we need to do little more about it? And that depends on the tightness of the macro policy framework and the fiscal policy framework you have. The tightness in the sense, now we are dealing with the rules-based monetary policy framework and rules-based fiscal policy framework. And the fiscal rule is quite crucial for a monetary rule. And we have a fiscal rule committing to the threshold ratios of debt and deficit. So that's exactly the concern. In the recent IMF paper, they have spoken about this mounting, the debt burden that's happening across the globe. And the combination of mounting debt burden and low economic growth, that's a matter of concern. So when the growth is not happening as much as you have expected in the post-pandemic realm, how much policy space we have to take these issues ahead from the GDP paradigm. Because a climate change commitment is a paradigm which is beyond GDP. So how much policy space you have, that you need to ask. And within that, if you have public financial management tools like green, budgeting or climate responsive budgeting, then the statement will be there, and it will be easier for the governments to avoid reappropriation of the committed spending when you do a budget tagging. So we need to know how many countries are ready to commit on this. Now, in the meetings, when we did this national adaptation communication meetings, the political economy question was how much India can ask the West or the global, forum to finance the climate change commitments, because in the deliberations the energy intensity is quite high in the Western world, not in India or in emerging country, any emerging country for that matter. So when the energy intensity differs, and the question of moving to a non-fossil fuel economy, how much financing can be done, whether it's blended finance, PPPT, or how much it can be funded by the developed world. That's an important question, because we have our commitments. We have mapped it around 5% of GDP. We have committed to the climate change commitments for the adaptation. We have reported that. But the question is, what is the plausibility to seek the green financing abroad? But there are issues related to this, because if the predominant form of financing the deficit is external, and within the external financing of deficit, if you incorporate the green infrastructure or the green financing, then you are exposed to the vulnerabilities of the donor and the vulnerabilities of the external financing. But in India, if you look into the pattern of the financing of fiscal deficit, it's hugely internal. We have moved away from seigniorage financing to the bond financing over the years. But now, within the bond financing, a few years earlier, that Sitaraman has committed to do a green bond or a climate related financing. So that thematic financing happened in Argentina for addressing the gender inequalities. They called it as gender bond. So such thematic bonds are a new kind of financing, the investment. Now, in NIPFP, in coordination with World Bank, we have done a project related to the public infrastructure management for a few states, including Orissa. So there, we had deliberations with the officials in Orissa, with the Ministry of Finance, of course, with Mr. Satyarath and Mr. Nihar. You must be knowing the officials in the Ministry of Finance. When we had the deliberations, what is the incentive for incorporating the green concerns within the infrastructure models? So when we asked that question, so their reply was that, those projects will get a lead when compared to the other infrastructure projects. Like if you incorporate the green elements into a public infrastructure projects, those infrastructures will get, more disproportionately higher, attention than the other project proposals related to the infrastructure. So the state of Orissa is much committed to have the green infrastructure and also to incorporate a green lens within the infrastructure projects. Now, I mentioned about the rules-based fiscal economics and monetary economics. If the rules-based fiscal economics doesn't give us enough policy space or the fiscal space to talk about the green infrastructure, what is the way out? Now, the articulation is that we have kept the fiscal deficit high, we have kept the fiscal policy very accommodative, thinking that this high fiscal deficit will be linked to infrastructure projects, and that will in turn lead to the economic growth. And within that narrative, where the climate is going to appear is the way in which we can have deliberations. Otherwise, it's a huge political will to integrate the climate change itself as a concern beyond the GDP paradigm. So, in many countries, we have green parties, but I don't think that the political will for the climate change commitments will come from a green party. Because in no states I have seen any parties with the propaganda of the greening of the public policies or the green related commitments. We don't have a green party in India. So the political will needs to come from a resilient economic growth incorporating a green lens, the green resilient economic growth, because the graduation dreams are all about the economic growth, but not about the green commitment. So there is a clear dichotomy between ecology and economy that's happening, and within this dichotomy, the only way in plausible way in which we can enter is the resilient, climate resilient GDP. Otherwise, the political will, we need to wait and see whether the government is ready to go beyond GDP and put the climate change commitments as the priority of the government at the center and the state governments. But right now, that is not kept as the single most priority anywhere, not in the states in which they produced even the climate responsive budgeting by tagging the budget practices. We haven't seen. And on the monetary policy side, of course, if you ask me whether there is a rate of change, the rate of change has happened, but that is only confined to the priority sector lending. We have not yet done a mainstreaming of incorporating or integrating the green within the monetary policy realm. So these are the concerns, and there are livelihood issues in addition to this, and those issues are also the part which is sectoral in nature. So in order to understand the policies related to the livelihood issues, we need to study the sectors. And for instance, a quick example is blue economy. And we have announced a new department of fisheries, like, in the union government, we didn't have a department for fisheries earlier. So now we have a new department, and they are looking into the concerns related to the blue economy. So there are sectoral issues which need to be dealt at the sectoral level. So these are the concerns. And now, as I mentioned earlier, the movement from the fossil fuel to the non-fossil fuel, I mentioned about the energy poverty. And here the question is, of course, you have, to deal with this energy poverty issues. Then we have taken lot of subsidies for electric vehicle. Then the power sector, it's an important area of concern. Power sector is in a mess. When we talk about the fiscal transition and energy transition, we cannot, talk about the issues without talking about the issues related to the electricity or the power sector. So when we unpack these issues sectorally, as I mentioned earlier, blue economy is an important issue. Now comes the second issue. Let me speak to you about the power sector. Of course, we have generated electricity for the consumption of the entire India. It is okay, production-wise. It's a dual story related to the power sector. Dual story in the sense, production story is quite a promising story. Distribution is not a great story, because we have distribution companies which are in mess, and there are many non-statutory liquidity ratio, that non-SLR bonds floated with state guarantee to clean up the mess of the discom companies. But if you look at the financial efficiency parameters and operational efficiency parameters of the discom companies, they are still not doing well. We have identified a few efficiency parameters on the financing side. That financial parameters, they include the tariff revisions, they include reducing the gap between the aggregate cost and the aggregate revenue, and reducing the third parameter is reducing the aggregate technical and the commercial loss. So these are the parameters. But if you take a interstate analysis, many of the states have not yet committed to stick on to these efficiency parameters. And on the operational efficiency parameter side, that's basically about the power infrastructure. So these are important concerns. How we are going to deal with the power sector and electricity. We have to give 100% electrification of Indian villages, or should we be subsidizing the electric vehicles? So electricity is a human right. Power, that's human rights. But should children be educated, without they sitting in the street lights, whether they will be having electricity at their home, or should we be using it for electric vehicles. These are the trade-offs and the concerns we have. And in addition to that, we need to clear up this mess. And the operational efficiency parameters are also not a promising, it's not a promising story. So these are issues related to the power sector. Like this, we need to unpack each of the sectors. Take the agriculture sector. It's very crucial from adaptation perspective. We don't have, much gross capital formation happening in the agriculture sector. Over the years, we have dealt with agriculture by giving cash transfers into the hands of farmers, but we have not sufficiently generated gross capital formation. It is declining. It's a monotonic decline over the years, GFCF in the agriculture sector. So we need to unpack and see. And industrial sector, within that, especially the mining sector, we need to look into the story of the mining sector. Of course, recently there was a Supreme Court issue whether the states have the right to tax mining, whether the mining royalty is a tax. So that Supreme Court judgment came with the, landmark judgment that mining royalty is not tax; it is an economic rent. So the story is related to state business relations. And if the state business relations go crony, then we had it. But over the years we have done the electronic auctioning method. We try to clear up the methodology in which we do work out the mining sector, but things are still there to be tackled. And now the question is, it's an extractive sector. And over the years, the revenue that is coming from the extractive sector and the revenue that is based on the fossil fuels will reduce because the fiscal transition will happen based on the energy transition. So we need to start working on the research related to the co-movement of the fiscal transition and the energy transition. These are important matters of concern. And right now, the existing arrangement within the industry, it's of course CSR is there for the companies, but in addition to that, we have earmarked a portion of royalty of the mining sector to plow back the money to the districts from which they extract the minerals. So the mining royalty that has got a tax rate and a tax base, and the rates are revised every 3 years by the central government based on the special royalty group, and it differs for the ferrous, it differs for non-ferrous, non-atomic, it is different for coal. So, but of course, it is moving towards an ad valorem rate, which is market linked. So you extract the ore, and based on the grade, grade will be different. So the ore multiplied by the grade, multiplied by the London metal price and the exchange rate. So that gives you the tax base. Then you multiply that with the tax rate. So that's the way you generate or arrive at the mining revenue. That's a royalty formula. So now the question is, just like the way in the African countries they do cashing in on oil, like the revenue stability is the basis of the expenditure design. But the revenue stability that comes from, mining resources, non-mining resources. So there is a question over there that should we be, doing the revenue requirements or extracting revenue from mining or from oil, from military. So these are fundamental questions. But revenue stability is very important, and we have to be very clear about the revenue requirements and from where we are extracting it from. And Orissa has a peculiar story to tell over here. Like the non-tax revenue that is coming from the mining sector is very huge. So, what is the commitment now to tackle the human development related issues and the spatial inequality issues? And we know that the District Mineral Fund, that's working very well in the context of Orissa, that is earmarking a portion of the mining royalty to tackle the spatial inequality issue. So recently, I attended a Brookings Institute and the UN, meeting, but they were talking these issues from the human rights perspective. So one of the participants asked the question that, like, how do you tackle these issues? Whether we should be doing a fiscal transition away from the extractive sector and such revenue requirements we don't require, but revenue stability is very crucial for our expenditure design. But, or should we be doing the extractive sector revenue generation and a portion will be earmarked for human development, like cashing in on oil? So these are fundamental questions what a country need to do, whether they need to do a fiscal transition away from the extractive sector, or whether they earmark a portion of the extractive sector revenue to the human development or the climate change concerns or to tackle the spatial inequalities. These are important questions when it comes to the extractive sector. So there are a lot of sectoral examples. So let me stop now by talking to you only about this blue economy, mining, and of course I mentioned about the agriculture sector. So we can take up more issues later in the question answer session. So that's it. So let me have a recap of my lecture, and let us open the floor. We have half an hour to do the deliberations. So I started with the standard setting functions like international public good, and it is also a kind of function which deals with the interjurisdictional spillover effects, and it is also a localized public good. Within the realm of the environmental federalism, we try to address these issues, but most of the papers, the research papers within the environmental federalism, are coming from the tax side because the capital is mobile. In order to attract the mobile capital, the jurisdictions will enter into a tax war. So that will lead to bad quality environmental standards because they, of course, want to attract the mobile capital. So in that process, they will not give priority to the green concerns at all. So that leads to race to the bottom issues. So environmental federalism within the race to the bottom issues, those research papers are quite a bit. But from the expenditure side, looking into the Kuznets curve, incorporating the fiscal federal variables, looking into the questions related to the flypaper effect, these are all the new kind of research that's coming from the expenditure side within the environmental federalism. So we have a paper, we asked the question related to the flypaper effect. Flypaper is nothing but, you need to understand that the subnational governments, for the subnational government authorities, there is a fiscal illusion which is favoring them. Like, what is a source of, public expenditure decisions? Citizens may not be aware. There is an illusion over there. In the sense, whether they are designing their public expenditure using own tax revenue or using the intergovernmental fiscal transfers. So if the intergovernmental fiscal transfer coefficient is relatively greater than the own tax revenue, we say that the money sticks where it hits, and there is flypaper effect because it is relatively easier for the bureaucrats or the local politicians to use the fiscal transfers rather than extract tax revenue from the citizens. But they always say that there is a Vixilian link that is operating, that there is a link between the tax you paid and the expenditure or the utility you enjoy from it because of this Vixilian link, and that money illusion. So there are many papers looked into these ecological fiscal transfers from those perspectives as well. So these are the concerns within the environmental federalism. Then we unpacked monetary and fiscal policy within the rules-based framework, and we understood that it's relatively done by the fiscal policy authorities than the monetary policy authorities, because monetary policy is still, they have not yet done the greening of monetary policies in a full-fledged fashion. So we are depending on ecological fiscal transfers as well as the climate responsive budgeting relatively, more, than when we look into the issues on, the monetary policy front. And I stop here and look forward to the discussions, and we can also take up the commitments before the Azerbaijan, COP29 conference, which is going to happen next month in November. Thank you so much.
Thank you so much, ma'am. If you can now put your camera on, that will be great. Now, okay. So now we can open the floor for questions, comments, and yeah, discussion. Okay, I think before others ask question, now let me ask one question. Yes, actually, I know that actually the finance commissions actually have started giving actually the formula-based transfers to the states, and the forest cover has been the only thing that has been discussed. And of course, you have proposed that actually whether you can extend this as to make some index and then do the transfer. Even if you do this transfer, is this money spent for say the purpose that actually we are looking at? So, for example, forest conservation. Now, probably would actually be the priority, but then is the state spending that much money for forest conservation when we're transferring, or is this money spent for other climate resilient activities? So, I think the Finance Commission has also never done such monitoring, and I think the states also are not probably doing this. And of course, actually, like states like Odisha actually have done some documentation, I would say, and probably that is definitely the first step actually to go for green financing. And but then I was again very much interested actually to listen to a proposal that green public finance management actually probably would be actually like in line with the FRBM. If we go for actually green public finance management, that the state has to spend this much money, or if or when actually whenever we are spending something on some specific projects, actually we probably need to evaluate whether this has some impact actually on the climate change or loss of biodiversity or yeah, any kind of environmental damages. Now, coming to the monetary policy issues, yeah, you have said that actually that now RBI actually is talking about this private sector lending, and that is again limited to the green infrastructure. And we do not know probably actually how much this has happened, and because private sector lending, actually we know that although there is a guideline, but in really to what happens, actually there are issues actually in that. So again, can we have a lower interest rate? No, I always think in very simple terms. Can we keep the interest rates lower for say the green projects, apart from the private sector lending, that this much credit should be allocated to this particular sector? Can the green projects, particularly, of course, I think now EVs usually have got some concession, but not actually in terms of interest rate. In fact, say for example, the people who take loan for buying a car, particularly electric vehicles, can we have a lower rate of interest for them? People may say that no, you are subsidizing the rich people, but no, we can say that we are subsidizing the green initiatives. So, will that be an appropriate policy intervention, or something else actually you are thinking? So, I think I will stop. I think I have already asked a lot of questions. So, I would like to thank actually you actually for covering all aspects and providing a very educating lecture. So, I'm sure actually many people would ask a lot of other questions. So let me see. Would you like to respond to me first and then take other questions? Yeah.
Yeah, I will respond to you. You're always, ask tough questions. Old habits die hard. So let me take your first question related to the ecological fiscal transfer. You're right. Your question is, of course, based on the net forest cover or composite index or whatever variable we will incorporate within the intergovernmental fiscal transfers. But are you sure that this money will be used for green commitments? That's a very important question. So this exactly has it's a question when we compare the 13th and 14th Finance Commission. 13th Finance Commission, they engaged in conditional fiscal transfers for the green commitments, and we can show that it is tied. There is no flexibility of finance over there because it's completely tied to the green commitments. So you need to do that. So it is a top down, like it is designed. It's a menu driven. It is designed by the Finance Commission, and the states need to implement that. But and relatively, conditional grants are also relatively in a less when compared to the tax transfers. But tax transfers, the issue, as you rightly pointed out, the money, we cannot disaggregate that money, like based on the criteria: population, area, net forest car, demographic transition, tax effort. Based on that, the interstate shares are decided, and that money will be devolved down to the states. But you're right that we cannot demarcate that within that this much is forest or this much is based on population. We can't do that. So the money is coming straight to the finance ministry. Then it's a priority of the states whether the green commitment is a priority of the state or the priority of the Ministry of Finance at the subnational levels. That is very crucial. That political will is very crucial in using or that tax transfers for the purpose of the green commitment. So you're right, the money is coming to the finance ministry. So when we sat with the deliberations, you were also there in many meetings. You must have heard the the cry from the forest department. Like earlier, money came straight to the sector. We could use it, but now it has to be decided within the state once again. And if the state prioritize, we get the money for the commitments. It is not a sectoral transfer like a conditional transfer. But still, Amar, I think unconditional is better. But it's an empirical question. We need to empirically look into this question of conditional transfers or unconditional transfers that led to maybe some handy outcome variable, maybe forest. So which coefficient is relatively better for increasing the forest cover? It's a quick question. Like that, outcomes we need to design, and we need to understand the question. I mean, we need to look into this analysis of what is better for outcomes, conditional or unconditional. If you're getting a result that unconditional fiscal transfer is better than conditional transfers, then the states, the flexibility of finances at the state level, that fiscal autonomy for using the finances at the state level, that helped a lot, and they could design the priority, their climate as a priority, and they spent. So we need to see, that link, the outcomes and the intergovernmental fiscal transfers, and we can take a call related to that. Once we are getting the channel that unconditional is better, then we need to analyze these channels. So that's my take on this. Now, your next question was related to, yeah, the
Monetary policy,
subsidies.
interest rate, basically, yeah. Lower interest
Absolutely.
rates.
Yes,
Yeah.
the monetary policy question. Yeah, that could be good. But, overall, if we are into a low interest rate regime, that will help us to keep the debt higher. The public debt management won't be costlier if the overall, the macro interest rate is low. That is exactly what the Oliver Blanches has spoken in the American Review, that paper. But now we are in a hawkish mode. Of course, we have done a pause, but when the interest rates are in hawkish mode, then your question is, can we have a differential interest rate regime for the decisions by the banking sector related to the climate change commitments? Um, yeah, even zero interest rate if you are engaging into the green commitments. But of course, that could be a very good proposal, because we have done this proposal for many human development related activities like microfinance, financial inclusion. We have done with this differential interest rate, that path. So it is plausible. But also, we have to ask the question related to the access to the credit and the cost of credit. So you are coming from the path of the cost of credit. Let the cost of the credit for the green infrastructure will be lower. That will be good. But I think we need to look into the access side as well. And many things, we need to tackle related to the access to the credit, liquidity guidance, etc. So that question is very well taken, and I do agree with you. Thank you. These were the two questions you asked, right?
Yes,
One
ma'am.
was
Yes.
ecological fiscal transfer, the other was interest rate management.
Yes, ma'am. So I think now we can take other questions. So maybe participants can raise their hands so that I can call them one by one. Yes, Dr. Sarath Kumar Malik. Yes. So you can unmute and ask your question.
Uh, uh, Hello, good evening. It's a nice one. First time I'm hearing this thing that the topic monetary policy and fiscal policy, they're linking with climate change. I could see there is very little connections of the monetary policy if you talk about the priority sector lending, which are meant for the people are the lower strata of the society. So their upliftment and those who are in the rural and cottage industries or agriculture. And the second point is that as per the fiscal side goes, I may be wrong. I do not know how the funds can be transferred for this climate change or for the ecological things. But on the other hand, I think you might be knowing that there is one concept called ESG, okay, environment, social, and governance. Okay, and before that, I'm not sure whether in other countries world over they have these funds allocated for this climate change and environment protections. So the ESG is one which has been, I mean, internationally as well as in India, and that is very mandatory for the companies to allocate certain funds for this environment, social, and governance. So there, the climate change and the other things are being taken care of, and the funds flow from there is huge. And the second point is that. That is one, and in the banking sector also, if we can link the banking sector, I mean, of course, RBI's monetary policy, and there, even there is also ES guidance, okay, regulations from brought out by Reserve Bank of India, how the banks should follow these ESG norms while they're lending, while they're borrowing, and while they're raising the resources. If you do not comply with the ESG norms, you cannot do it. The more stricter norms are there for the companies, those who raise the resources, not necessarily in internationally also, and which are also, rated. So no company or no individual or no entity can raise the funds without complying to the ESG norms. So my point is that if ESG is giving more preference, or ES is more directed towards that, so it may not only allocate more resources for this cause, as well as uh, the target can be achieved in this. So if in this area some work can be done, so it will be very, very helpful and useful. Thank you.
Thank you, Professor Sharath. These are brilliant points. Today I had this advisory board meeting with the Christ College, and they all concerned about this ESG. With they were talking even incorporating these within the curriculum, that the students should be looking in the industry, academia links and all. This point is very well taken, especially when the corporate sector, they don't like government increasing the rates every 3 years. So they're talking that if revenue augmentation is the reason that you are raising the tax revenue every 3 years, then LAFACA might operate, and you will not be able to augment the state governments with sufficient revenue. So they are very concerned with the multiplicity of the rates, the rate revision every 3 years. So now I'm speaking like Vedanta, and now I'm speaking like Tata. So the concerns when we talked with them, the industrial concerns is that For the Vedanta, of course, ESG is very well taken. I am supplementing some more issues into it. They are talking about integrating the value chain within the fiscal policy imperatives. So they want to incorporate the value chain within the calculations of this royalty taken from the mining sector. Second is, if the taxation regime is ad valorem, why we should be increasing the rates and why we should be engaging in the multiplicity of the rates, like different rate. Now one more tax will come, that will be carbon tax. So it is like affecting the competitiveness of the industrial sector to commit. So this, when the competitiveness of the sector is affected, the revenue augmentation will be relatively lower. So this is what is a state business narrative. So the parallel to that, what you have talked about ESG is very well taken. Thank you for raising that point.
Okay, thank you so much. Now we may go to the next question by Nalin.
Hello.
Yes.
Am I audible, sir? Madam?
Yes, you are. Yes.
My question is, madam, very simple thing. Whatever the climate change we are all discussing, that COP29 is coming and all those things at the international and the very macro level. So, but most of the time we are hearing the poor and the vulnerable sections, their poor are the most vulnerable section. And as regards to the poor, especially we in the South Asia, that also been decided. So it is the most vulnerable section. So question is that if the poorer will be the more affected, then at the macro level, a lot of things are discussed. But like the direct benefit transfer targeting the poor poverty elevations, we are having the schemes. Like the multidimensional goals in the Human Development Index, we are having. So my question is that have you framed any contour how that the poor, the vulnerable, those will be more affected, so they can be get rid of all this, the climate change. Means the directly any contour is set or any mapping is there or any plans or actions are there so that they can be getting the benefit of this climate change and they will not be so much be affected. So my question is that at the bottom of the pyramid, the directly touching to them, like if their houses are not good, prone to the wear, so good houses like that from the agriculture sector to other sector, these are at the in the different platform it is there. But as regards to climate change, how they will not be affected much in that connotation, anything is framed out. My question is that.
Thank you, Nalin. That's a crucial question. As I mentioned in my lecture, this energy poverty is the concern, and that's where, I began my conversation. So, to me, the point you mentioned about this energy poverty, that's very crucial, and how we can tackle these issues, because the macro concern is about the financing and reducing the overall carbon commitments, the levels, emissions to a particular point. But when you do that, the path is equally important as target. That's exactly what Nalin has pointed out. So the path is like we need to reach, and if you go overnight to the non-fossil fuel, it is going to affect the poor people. So what is the transition mechanism to tackle these issues at the poverty? And I don't see any direct benefit transfers yet, Nalin, to tackle with these issues. I don't have any specific information related to this energy, infrastructure or cash transfers to protect this, poor. But what we are articulating is that the transition, the energy transition, will take time. So that's the only commitment we have done. Thank you.
Thank you.
Just to quickly add to this issue,
Yeah.
can we use payment for ecosystem services to compensate the poor people? So, have you thought on this? Like some people are also proposing nowadays that can we use the district mineral funds
Correct. I
to
was
the
about to say that. Yeah.
yeah. So the people who have been worst affected probably can be compensated. That is one issue. The other is that people who are contributing positively to the ecosystem restoration probably can be paid, like we have already carbon credits. Okay? So, and Government of India is already thinking in that line. Or, for example, now since you have talked about the stubble burning, in fact, I think Haryana government is also trying to like pay some, and there have been arguments actually. Can we pay them some incentives not to burn all these things? So I think probably there are some direct or indirect mechanisms actually which will help the poor section of the society actually who are going to be most affected.
Wonderful. You have given a beautiful reply to the Nalin's concerns, better than my answer. These are the answers, I forgot about these thing when he asked me. These are the answers to his question, and especially the district mineral fund during the pandemic time. We have used that money for many purposes. Usually it was designed to tackle the spatial inequalities from the districts in which it was extracted, but we have used it during the COVID times for other purposes as well, the district mineral fund. So you're right, like if you can use that to tackle the human development concerns, that will be good, and I can't agree with you more. Thank you so much for supplementing the answer. These 3 points are very well taken.
Okay, thank you, ma'am. I think we can take the next question by Santosh Saravanan. You can unmute and ask your question.
Yeah, hello, ma'am. Hope I'm audible. My
Yeah,
question
you
is
are.
Yes, you
mainly
are.
in terms of what's the role of fiscal policy in, or what should be the role of fiscal policy in influencing the action of people? Because climate change as an issue, government's control, power is there, the source of power generation. But again, the power consumption is at the end of people. EV. So other than power, I can just EV where government can subsidize it to an extent. But the ultimate consumption of even consumptions, including crude oil, on the individual level happen. So for climate change, or change of what you are doing, how much actually intervene in
Santosh,
the
Santosh,
yeah,
I can hear you, but it's not clear. Can you repeat that last portion again? Because you're not
do better.
frozen, but some disturbances. That last portion, can you tell me again?
Yeah, now it should be better. What I'm asking is in terms of
Yes,
the
it's better.
ultimate
Yeah.
action should happen at individual level. For them to consume less of fossil fuels or to move to EV. Uh, Leaving power aside, for EV, government is giving some subsidies. But otherwise, I just want to understand what role should fiscal policy as such play in influencing the individual actions? Because the transfers that we spoke, whatever you have mentioned, is at the government level that funding. How should that fund be used to modify the behavior or the final outcome?
Wow, wonderful. Oh, great. So your question is fiscal policy and the behavioral part of it. So let's begin from the fiscal policy. Fiscal policy, of course, you are right. Like at the macro level, within the fiscal consolidation framework, within the fiscal rules, we have earmarked that the state governments can avail extra 0.5 percentage of the borrowing, if they do power sector reforms. So the energy transition and fiscal transition are incorporated within the fiscal consolidation framework beautifully, because now in the post-pandemic period, we have 3.5 fiscal deficit, and states can go up to 3.5 fiscal deficit, but this extra zero point 0.5 is related to the power sector reforms. So that's what is the fiscal consolidation framework and the energy transition. Now you're asking me the question that, of course, this is top down, it's okay, but how can it relate to the behavioral change among the people? That's a question. I think there was an experiment done by the Max Planck, researchers regarding this, like, the students and the green workers in, especially in Kerala, we have green workers, Harida workers at the local government level. So whenever they do, something related to positive related to the climate change, they have an app. So in the app, they can upload. Then the government will give a credit or a incentive based, something to them that you are acknowledged. So something like using the digital infrastructure, using the local level functionaries, the behavioral, and even the students were part of that experiment. So this was like in the initial stages, the experiment showed that there was no much behavioral change, but later on, with the incentive, with all these things, the things moved. There are many experiments which we can do at the local level related to the behavioral change that is happening, for men and women, boys and girls. This was your question, right, Santosh? We have experiments related to the behavioral, yeah. Thank you.
Yes, this was question. Actually, principal level, should fiscal policy, matlab, should fiscal policy
Just
influence?
ask me again. Ask me again.
No, even at the principal level, should fiscal policy look at behavioral changes, or should they target it?
Uh, Yeah, because you are reminding me the recent trend. What is happening in the fiscal policy realm. Like we do lot of nudging experiments these days.
Oh,
Whether it is
oh,
income tax, we have two regimes. So we are doing nudging. And if you look at the fiscal federalism or cooperative federalism, for the first time ever, we are nudging the states to do competitive federalism. So you're right. Like in the environmental commitments, also the fiscal policy can nudge. That's quite plausible. Yes.
thank you.
Okay, then we can take the next. I think this will be the last question by Abhijit Patnaik. Abhijit, yes, you can unmute and ask your question.
Thank you, sir. Hello, ma'am. Good evening. Ma'am, my question is, these days climate issues actually are not merely the realm of the climate, means under the realm of the climate issues. Rather, it's more of a national security problem. So when we're looking at present, we see Arabian Sea hits up more faster than the BOB, means the base Bay of Bengal. So can it be a smart move for the hyperlocal mapping vis-a-vis weather mapping to move towards the smart climate? That is my question. Thank you.
Abhijit, tell me about your background. It's so tough. Your question. You're student or professor?
No, ma'am, I'm a student.
Your which university you're studying?
From
Are you
PPUT,
researching
ma'am.
on these issues? Yeah.
Presently, I'm a UPSC aspirant, ma'am.
Wonderful. You have knowledge about it. Your question is very well taken. Of course, it's a security issue. As long as ocean economy is involved, of course, you're right that this can also be a security issue. This reminds me a book I read recently. Okay, maybe I will talk to Abhijit, right? Abhijit later. It's like. Okay, maybe I'll talk only like economist language. That story I will, share later. That book I read. The economic perspective is like this. You mentioned about the coastal, the security, but if you look into the economic convergence, when we do this analysis, right, we have coastal states and we have inland states. So we do the club convergence analysis. And in the club convergence analysis, the coastal states were, having the economic convergence faster or the growth faster than the inland states. But along with that, as you rightly pointed out, we have a lot of security issues as well. So how to deal with that? But I don't think that any papers looked into the climate change concern in India from this international security perspective. And if you have come across Abhijit, I am you're more than welcome to share that paper with me, because peace, security issues, and the climate change, that could be a wonderful field of research. Because I was looking into the fiscal and monetary policy questions related to the climate change, but you're opening a new avenue that look into this question from the international security perspective. Amar, do you want to add to it, or any participants want to add to this point? Like look at it as a security issue, because it is of course an economic diplomacy issue. We are doing that at the international realm. We are waiting for the Azerbaijan conference. But there also, we will talk about energy poverty, we will talk about the financing concerns. But international security issue and the climate change. Go ahead. Amar, if you have a point, then you can have the final word and then we can wind up. So thank you, Abhijit, for raising that question.
Thank you so much, ma'am. Thank you for addressing my question.
Yeah, I think we had a wonderful discussion, and I think we will invite now Professor Ravinarayan Patra to give his presidential remarks. Over to you, sir. Sir, you can please unmute. Sir, please unmute and speak. Ravi sir, please unmute. Yes.
So thank you, Lekha ma'am, for a very wonderful lecture. I will add just one thing. It is not only the district mineral fund that is misused. The other misused one is the CSR fund. That is also equally misused.
Sure.
So we need to think of that also.
Yes.
And I will definitely agree with all that the monetary policy and the fiscal policy all need to be more climate smart, and they have to be leveraged to support climate action, climate financing, and climate change adaptation also. And it is necessary to incentivize green investment and green consumption, and we need to discourage carbon intensive activities. These are definitely the call of the time, and we need to address these issues. These are very important things, and since you are at the policy making level, I will request you to do your best to see that the benefits percolate to all and the costs are shared by the people who are inflicting the cost, or the corporations who are inflicting the cost. Thank you, madam.
So at the end, I express my sincere gratitude to Lekha ma'am for spending her valuable time with us in this evening and sharing the broader issues actually at national level and international level, particularly in India, like what all initiatives have been taken by Government of India from the fiscal policy side and also from the monetary authority side. And also she has shared with us the various initiatives taken by the state governments, including Odisha particularly. In fact, outside the state, particularly outside Odisha, many people appreciate actually the fiscal measures taken by Odisha government. And that is because of actually many smart bureaucrats that we have at state level. So that way, the finance department has taken very innovative, steps, actually, particularly the green budget and gender budget also in Odisha, and child budget. So very, innovative, initiatives are being taken. So I hope this will be mainstreamed in the coming days by all states, and also the measures will be strengthened by Government of Odisha. So thank you, ma'am, for educating us, and thank you, Ravi sir, for chairing this session, and thank you all the participants who have joined this evening for this wonderful lecture. Thank you, ma'am. With this, you can.